Chevron's latest earnings report is fascinating. I mean, there's something kind of strange going on. They're making record profits, but at the same time, their total sales are actually shrinking. Now that sounds impossible, right? More profit from less money? Well, figuring out how they're pulling this off, that actually reveals their entire game plan for the future. So let's break it down.
Okay, so here's that puzzle in black and white. On the left, you've got the good news. Their profit, their earnings per share beat the forecast. Nice. But then you look to the right and oof, the bad news. Their total revenue, nearly $46 billion, was almost $2.5 billion short of what everyone expected. So, more profit on less money. How on earth is that possible? Well, the answer to that question is the key to understanding everything Chevron is doing right now.
All right, so the first piece of this puzzle is honestly pretty simple. They're getting bigger. A lot bigger. Before we can even touch how they're squeezing more profit out of every dollar, you have to appreciate the sheer scale of their operation. Because in 2025, they weren't just running a business, they were running a global energy machine at a pace that absolutely shattered records.
And it all starts right here, in the Permian Basin of Texas and New Mexico. This one region has become Chevron's absolute engine room. They are now pumping over 1 million barrels of oil equivalent from this area, every single day. Just to give you a sense of that scale, that's like a whole new, major oil-producing country's worth of output, coming from just one of their fields.
And hey, this isn't just a US story. Not at all. Halfway around the world in Kazakhstan, their massive Tengiz project roared to life, adding another 260,000 barrels to their daily total. This really shows you the global scale of their ambition.
So when you add up to Permian, and you add Kazakhstan, and all their other projects, you get this just an incredible result. 2025 was the single biggest production year in Chevron's entire 100-plus year history, both in the US and worldwide. Think about that. They were pumping more oil and gas than at any other time ever. And you know, this record wasn't some fluke. It was a full-on, four-pronged attack. You've got that massive Tengiz project we just talked about. You have new deep-water fields in the Gulf of Mexico firing up. Then there's the huge acquisition of Hess Corporation, which adds a whole new portfolio. And even the refineries back in the U.S. were running at their most efficient levels in 20 years. I mean, every single part of the machine was firing on all cylinders.
So, okay, they're producing record amounts of stuff. Got it. But that's only half the story, right? The second part of the answer to our puzzle is how they took that massive scale and turned it into raw financial strength, making the company stronger and, frankly, a lot more resilient.
And this number, this is where all that physical scale becomes pure financial power. Chevron generated around $20 billion in adjusted free cash flow. Now, that's the cash left over after paying for absolutely everything needed to run the business. But here's the really impressive part. That number is up over 35% from last year, even though oil prices were lower. That, my friends, is the sign of a ruthlessly efficient machine. And you don't have to take my word for it. CEO Mike Wirth summed it up perfectly. He said 2025 was all about one word: execution. They turned record production out in the fields into record cash flow on the balance sheet. It's that direct line, from physical output to financial muscle, that really defines their whole strategy.
So, what do you do with $20 billion in cash? Well, for Chevron, it's a super clear three-step priority list. First, you reinvest a disciplined amount right back into the business. Second, you pay your shareholders a dividend, which, by the way, they just increased by 4%. And third, you use what's left to buy back your own stock, which drives up the value for everyone who still owns shares. Simple as that.
And this is the real secret sauce behind their profitability. While they were hitting record production, they were also on a cost-cutting mission, slashing $1.5 billion in permanent costs. And they're not even done yet. But the most crucial point is at the bottom. Their entire business is now built to be profitable, even if the price of Brent crude oil, the global benchmark, falls below $50 a barrel. That is what financial resilience looks like.
So Chevron is bigger, and they're stronger. But the final piece of this whole puzzle is about getting smarter. It's about making really specific, strategic bets to position the company for what is a very complex and, let's face it, a rapidly changing future.
And if you want to see how they're getting smarter, you just have to look at one of the most geopolitically complicated places on Earth, Venezuela. Now, for Chevron, this isn't some new risky gamble. As the CEO's quote makes clear, they see it as a continuation of their century-long history in the country. It's a commitment to its past, its present, and its future.
So here's the breakdown of that bet. The opportunity is huge. They've already managed to ramp up production, and get this, they're funding it all with cash generated inside Venezuela. They believe they can boost production by another 50% in just the next couple of years. But the risk? Well, it's just as massive. The whole thing hinges on this delicate dance of geopolitics and whether they can keep getting the green light from the US government.
And Venezuela isn't a one-off gamble. We're seeing a very similar playbook in another geopolitical hotspot, the Eastern Mediterranean. Chevron is making huge moves over there to develop massive natural gas resources, again, by navigating a really complex regional landscape.
To be specific, they're expanding 2 enormous fields off the coast of Israel and developing a brand new one in Cyprus. So why does this matter? Because these projects are on track to double their earnings from the region and lock in a huge, stable source of natural gas for Europe for decades to come. It's a big deal. But just when you think you have their strategy totally figured out, big oil and gas projects in tricky parts of the world, they throw a curveball. Their next frontier? Well, it might not be what you expect. This slide really shows that pivot in action. They're making 2 very calculated bets on where future energy demand is going. First, lithium. They're snapping up huge amounts of land to get into the business of producing one of the key components for electric vehicle batteries. And second, data centers. I mean, as AI and the cloud explode, so does their need for power, and Chevron wants to be the one to provide it. These are their first really big steps beyond their traditional business.
So, you put it all together, bigger, stronger, smarter. And what does the road ahead actually look like for them? Well, it's a very, very careful balancing act between these huge new opportunities and some very real risks.
And you can see that balancing act right here. On one hand, you have massive upside potential from places like Venezuela, from integrating Hess, and from all this new tech. But on the other hand, a power outage in Kazakhstan was a recent reminder of how quickly things can go wrong. Their success is tied to fragile geopolitics, and at the end of the day, they are still exposed to the super volatile prices of oil and gas.
Which leaves us with this final big question. With this strategy of getting bigger, stronger, and smarter, is Chevron successfully building a resilient bridge from the energy system we have today to the one we'll have tomorrow? Or, by doubling down on these absolutely enormous long-term projects, is it becoming a giant that's just too big to pivot if the world changes faster than it expects? That right there is the multi-trillion-dollar question at the very heart of their future.